All right, today we're cracking open the Buffett Blueprint. We're going to distill the simple but incredibly powerful principles behind one of the greatest financial stories ever told. And it all kicks off with a number that it just doesn't seem real.
So let's start with this monumental number that represents Buffett's success. But here's the thing, the real secret isn't actually in the number. No, it's hidden in a moment of incredible restraint, a moment that seems to completely contradict it. And understanding this paradox, that's the key to his entire way of thinking.
There it is, 5.5 million%. That's the staggering return Warren Buffett delivered over his 60-year career at Berkshire Hathaway. I mean, it's a number so big it almost breaks your brain, right? This isn't just about picking a few good stocks, it's about a completely different mindset. So that's the million-dollar question, isn't it? Or maybe the 5.5 million% question. How did he do it? Was it just a long string of lucky bets? Some kind of superhuman genius? Or, and this is the interesting part, was it something much, much simpler? Something rooted in patience and a specific way of looking at the world that, honestly, anyone can get their head around.
Okay, to really get Buffett, you have to try and see the market through his eyes. For him, it was all about the flow of ideas. He said that when the market is cheap, great investment deals are everywhere. It's like you're standing at the bottom of Niagara Falls. But when the market gets expensive and kind of crazy, that powerful waterfall slows to a tiny little medicine dropper. Drip, drip, drip.
And this brings us to a crazy moment in 1969. The market was on fire, a total mania, and everybody was getting rich. So what did Buffett do? He did the unthinkable. He actually closed his fund and gave all his investors their money back. Why? He told them the medicine dropper was empty. He couldn't find a single bargain, so he just refused to play the game. And that, right there, is our first huge clue. His greatest weapon was the discipline to do absolutely nothing.
But, having the discipline to sit on your hands is only half of it. You also need the cash, the firepower, to strike when the time is right. And Buffett, well, he had a secret engine that was churning out billions in cash, and it had almost nothing to do with buying stocks.
And that engine is something called insurance float. Let me break it down. Think about your car insurance. You pay your premium today, right? But you might not get in an accident and file a claim for years or maybe ever. So that giant pile of cash the insurance company is just holding on to, all our money, collected up front, that's the float.
Here's the best way to think about it. It's basically a 0% interest loan from millions and millions of customers. Buffett got to take this huge, constantly refilling pile of cash and invest it for his own company's profit. He literally used other people's money, for free, to build an empire. I mean, it's just an absolute masterstroke.
Okay, so Buffett has two things: incredible patience and this secret money machine. This combination set the stage for one of the most legendary moments of his entire career, the moment when he finally decided to unleash all that capital. And here's the payoff. For 5 long years, starting in 1969, Buffett just waited. His medicine dropper was empty. Then, bam, 1974 happens and the market crashes. It was a total bloodbath. Everyone else was panicking, selling everything they owned. And Buffett, he finally saw Niagara Falls again. It was time to open the floodgates on that insurance float.
And he was not subtle about it. This quote right here, it just perfectly captures his mindset. While the entire world was gripped by fear, he was ecstatic. For him, the crash wasn't a crisis. It was the single greatest opportunity he had seen in years. He saw amazing deals everywhere he looked. This really gets to one of his core beliefs. For Buffett, the stock market is just a machine. And what does it do? It transfers money from people who can't wait to people who can. It's designed to reward those who have the discipline to wait for the perfect pitch. His patience wasn't just some nice personality trait, it was his #1 financial advantage.
Here's a really simple way to think about his whole be greedy when others are fearful thing. Imagine your favorite store announces a 70% off sale. You don't panic, right? You rush in there to grab all the deals. But for some bizarre reason, when the stock market has a 70% off sale, people panic and run for the doors. Buffett just did the logical thing. He went shopping when there was a fire sale.
So this whole approach, this contrarian mindset, it wasn't just a one-time trick. It was all part of a timeless philosophy, a set of mental models that guided pretty much every decision he made for over 60 years.
So first up is what I call the decade test. Buffett always said people should stop dating stocks and start marrying them. Before he'd buy a single share, he'd ask himself a really simple question. Am I willing to own this entire business for at least 10 years, even if they shut down the stock market tomorrow?
If the answer was no, he wouldn't even own it for 10 minutes. It's all about that true long-term commitment, not just a short-term gamble.
Next is the idea of a knowledge buffer. For Buffett, the real danger in investing is not a falling stock price. That's just noise, it's volatility. The real catastrophic risk is ignorance, not actually understanding the business you put your hard-earned money into. See, if you've done your homework, a 30% drop in the stock price doesn't scare you. It's only when you're flying blind that you are in real trouble.
So, what does this whole blueprint mean for the market right now, today? Well, as it turns out, Buffett's final actions before stepping back might just have been his final warning, a message aimed squarely at a time like 2026.
And here we are, the story has come full circle. Just like he did back in 1969, it really looks like Buffett, in his final act, saw the flow of good ideas slow down to a mere trickle. He went right back into medicine dropper mode. And the data? Well, the data's pretty clear on this one.
Just take a look at the price-to-earnings ratio, which is just a fancy way of asking, how expensive is the market? Right now, it's sitting around 27. The historical average? That's way down at 16. So by this classic measure, the market is historically very, very expensive. The easy bargains seem to be gone.
So what's his response to this? He's hoarding cash, a lot of it. Right now, nearly a third of Berkshire Hathaway's assets, a truly mind-boggling amount of money, is just sitting in cash. Now, this isn't lazy money, this is dry powder. He is actively choosing to do nothing, just waiting for the next big fire sale.
This quote right here is his ultimate warning. A booming market, a rising tide, it makes everyone look like a genius, right? It covers up all the dumb mistakes and bad decisions. But when that tide inevitably goes out, that's when we finally see who was actually prepared and who is just getting lucky.
And so the Buffett Blueprint really leaves us with this one final crucial question. It's not about trying to predict when the tide will go out. It's about having the discipline, the cash, and the mindset to be ready when it does. The lesson from 5.5 million% is actually pretty simple. The patient will get paid. The only question left is, are you one of them?